In March 2018, Switzerland will be the first country to vote on its money system. The initiative asks for positive money, but what does this even mean? In Switzerland, only the National Bank is allowed to create physical money. They distribute it to commercial banks and make profit in interest, which then is being made available to the public. Thus, everybody profits. However, this physical money only makes up about 10% of today's money. The other 90% is check money, which only exists virtually and is created by commercial banks via giving out credits. They don't have to be able to cover those credits with physical money. The commercial banks are the only ones who profit from the interest on those credits. This is possible because the creation of check money is not regulated in the Swiss constitution, as it hasn't been updated with the rise of digitalization. The initiative for positive money thus demands to direct the right to create check money solely to the Swiss National Bank and that all check money will be converted into real money. Now, in order to fully understand the mechanisms involved and to help you build your own opinion, we gathered the according consequences to a yes or no vote. If the initiative is going to be accepted, all check money, which counts up to 300 billion Swiss francs as of today, would be converted into real money on day X, which will make the Swiss franc crisis-proof. Bank runs won't ruin a bank anymore, since they will be able to actually pay out all deposits. Thus the state wouldn't have to rescue the banks anymore. Commercial banks won't be able to make capital gains on non-existing money anymore. However, they will still be responsible for the financial transfer business. Since all new money will be created by the National Bank, the public would profit from the interest on it as well, which is guessed to be up to 10 billion Swiss francs annually. The parliament will have to decide on what this money is going to be used for. Retail banks might stop to offer interest on accounts, as the deposits won't have to be lent out anymore. However, since they will still charge management fees, the private individual might lose interest in opening a bank account, which would then again hurt the bank's business. What will and might happen if the initiative gets declined is the following.
In general, we can say that this initiative isn't able to get rid of the problems that exist in finance. There will still be financial crisis, also if the Swiss people vote in favor of the initiative. It could still come to bank runs because merchant banks would still try to attract saving funds and try to invest this money on a long-term basis. The system we know today is more efficient and brings better results. Today's system is based on devolution, market economy, competition, regulation, and a monetary policy that can be implemented over interest and solvency. Also, if banks would get out debt-free money, there wouldn't be any money to use for functions and divisions of profits for the state and the cantons. The political pressure on both public and private sectors would get very intense to get debt-free money, and this would complicate the monetary policy. With this initiative, the financial sector and the national economy will get weakened. The profit potential of the banks would decrease, and the pressure on their margins would increase. Also, the initiative doesn't protect Switzerland from negative impacts of financial crisis abroad. The financial center of Switzerland would get isolated and the Swiss franc would collapse, which leads to an escape into other currencies like euro or dollars. Another problem is that the independency of the Swiss National Bank is in danger, because the Swiss National Bank would then be the only creator of money, which could mean that the Swiss National Bank could be influenced by political interests. Also, the economy wouldn't grow as fast anymore because there is less money and people take out less loans. In some points, the initiative makes sense. For example, if the Czech money is converted into real money, the Swiss franc would be crisis-proof and there wouldn't be bankruptcies. Also, that the money that would be created by the Swiss National Bank would belong to the public. But the initiative isn't able to get rid of all problems. It still could come to bank runs and so on. This initiative can't stand by itself. It is only a piece in a bigger system that still needs to be created. We don't just need a new money arrangement for a fair and efficient social system. We also need an economic democracy, fair taxes, a good education policy, a working infrastructure, and a sustainable energy and environmental policy. We could say that this initiative is a step into the right direction with good ideas behind. But it is not possible with this initiative to change everything, and there is still a lot to be done.